Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Welcome, everyone. This is Steve Meizinger, your host, and today I'm the presenter. I'm talking about which FX option strike price to trade. This is the Back to Basics series where we at the ISC feel that learning options is very, very important. So we decided to offer a sequence of classes on options. So this is our second of 8 classes that we're going to be offering over the next couple of months. And hopefully you'll be able to either attend them all live or go back to the archive, listen to the classes, watch the classes. Once you understand options, various strategies, you might want to implement an FX option strategy, but you really need to understand how these options work, what your goals are, what your risk tolerances are, and we're hoping that these group of webinars are going to shed a lot of light on that. So today I'm talking about which FX options strike price to trade. Lots of strike prices out there, and there's no right answer on strike prices, which one, but it's all about leverage and timing. So very, very important. If you want to learn more about options, well, the first thing you should do is continue to come back to the ISC, Tuesdays, Wednesdays, Thursdays. We offer them just about every Tuesday, webinars, and we also offer sometimes Wednesdays and Thursdays. We're here today where we're talking about either the basics, as what I'm talking about today, or we bring in special guests, or we have a group from Europe Trading Central, and they look at the technical aspects of the market. They actually make trading recommendations. So if you'd like to implement those recommendations, you of course can do that, but the first thing you always want to do is understand the basics of options. So I'm glad you're all here today. If you want to learn more about options other than coming to the ISC webinars, you can go to optionseducation.org. Any of the examples that I talk about today will not include taxes, margin, or commission. Those are very important factors in any options transaction. Trading options, it's about risk reward. There's no getting away from that, like in any other investment. So if you're looking for higher rates of return, you're normally going to take more risk. I hope that makes sense. And what you really want to consider is that you need to think not only about how much money you might make, but how much you might lose. So occasionally markets move in unexpected directions. And in the last 6 or 7 weeks, I would think that very few people thought that the dollar would actually rally. And we've seen a pretty good rally out of the U.S. dollar. Will it continue? That's up to all of us, traders, investors, to decide. But you need to think in terms of something that's very, very likely is not a guarantee. So options give you the ability to trade with limited risk. They also give you the ability to sell options with limited risk by using credit spreads. I'll talk a little bit about some of the strategies in future webinars. But today I'm going to be talking about which strike price to trade and the risk reward associated with the various strike prices. You should always think about diversification. You might want to even think about hedging to help reduce poor portfolio performance. So risk, what is it? Investors should consider not only taking too much risk, but also taking too little. If you take too much risk, you might suffer significant drawdowns. And if you take too little risk, you might, quote unquote, miss the boat of great market opportunities. So you have to balance both of those points. If you have any questions as I go along, I'm going to answer all the questions at the end. I want to have as long a Q&A as all the attendees, all you guys, are willing to hang around. So type your questions in, and I'm more than willing to answer all the questions. I will tackle them at the end of the presentation. starting an options presentation, well, the first thing you need to know is what is the alternative of an option. You could be long or short the underlier, and you'd have 100% of your performance based on it moving up or down. So that's the simplest approach, and you might want to look at, let's say, at the spot, which is the cash market for currencies. There are futures that are available. They all offer differing risk rewards. I love options because options give you tremendous choice. So if you're looking, as I said, the spot market is the cash market, and you can be long the asset, short the asset, or not be in the market at all. This slide 7 is very powerful, extremely powerful. Why? It gives you the payoff diagrams of 16 different strategies in a snapshot. So if I'm looking at the risk reward of a call trade, call strategy, well, I would just look at this one. So here it is, call strategy. I wanted to look at the risk reward of a put strategy. There it is right there. And so on. You could go through the straddles and strangles and vertical spreads, volatility spreads, all right there. What you want to understand is the risk reward of any transaction. And these slides will be available via archive tomorrow. I'm getting a couple questions on this. So you can go back over and over. Go to www.ise.com/archives, and you can get you can view this presentation over and over again. I hope that, I'm sure it'll be helpful. There is, just checking out the attendees, I see one gentleman, Stephen B, is logged in 7 or 8 times. Stephen, you're going to suffer poor audio and maybe even video. The slides might not even be turning because your browser, you're logged in so many times. So I would actually exit many of those browsers. That'll help the performance of your of the presentation. Okay, so let's move on. So when I'm thinking about an option strategy, let's say that you're bullish on the euro against the dollar, or conversely, you're bearish on the euro versus the dollar. What can you do? What are you thinking about when you're looking at options? Well, you've made that decision. Which way is it going to move? Based on seasonality, based on short-term trends, intermediate-term trends, longer-term trends, based on fundamentals, based on hedging, what have you. So you've made that decision. Then you have to think about how far is the asset going to move, and then how fast. And again, none of us really know for certain, right? We don't know, is it dollar-euro going to move, or euro-dollar going to move from 140 to 130 or 140 to 150? You have to have a reasonable expectation. That's what option trading is all about. And then you select your timing. Is it going to happen over 1 month? Is it going to take 5 months, 9 months, what have you? Another point you want to think about is, do I want limited risk? If I want limited risk is, I would look at this row right here. The buyer row would give me the right to either buy the exchange rate or sell the exchange rate.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.